doesn't know where to hold their trades, where to hold up to, or where to sell down to, or where to actually sell in the first place, this is going to answer your questions. And so this is our POI. So if I just kind of drag this over to the right, your POI is essentially an area where you want to be targeting and trading away from or towards. Okay, so this is what we call the 4-pillar approach. And so what's happened over here is that we've had a break of market structure. So if I just make the market structure a little bit more clear, we've had a break of market structure just over here. So we're bearish in terms of our market structure, right? Then we've done our dealing range structural high, dealing range structural low. This is the all-time high on gold. Then from here, we've understood our premium and discount arrays. And so our premium and discount arrays above the 50% area for a premium, below the 50% for a discount. And the final thing is, of course, fair value gaps, which is just over here. The fair value gap is always different from the POI. The POI is one candle before the fair value gap, right? A fair value gap validates a point of interest. And so when it comes to choosing a point of interest on the higher time frame, there's 3 things you need to look for. The first is a break of market structure, right? You want to see a shift in the market structure. This structural low was broken over here, right? So if I just kind of mark out the structure for people so they understand, this is how I'm looking at it. I'm looking at structural high, structural low, then of course the dealing range high, and then boom, we break structure. We actually broke structure here because we broke with the body, and then we're looking for a pullback to confirm this structural low. So that is step number 1. We want to see price breaking with a body. Step number 2 is we are looking for a fair value gap. And step number 3, we want to be in a premium because we're looking for a sell trade in this particular gold swing case study. And so we're looking for a fair value gap that's resting over here. And so with that being said, if we just kind of play price on a little bit, right, what we're looking for is for price to reject this POI. So again, this POI breaks structure, it leaves a fair value gap, and most importantly, it is in the premium, which is where you want to be selling from in the first place. So now if we go down to the 15-minute time frame, right, the 15-minute time frame will give us a higher indication of what to look for. And so what we need to understand from a swing